So you're thinking about investing in Sri Lanka, but maybe you're not quite sure where to begin. Well, you're in the right place. We're going to walk through everything from the really safe stuff like government bonds, all the way up to the higher risk commodities like tea and gold. Let's figure out how to make your money finally start working for you. I mean, it's the big question, isn't it? You work really hard for your money, but what's it doing? Is it just sitting there in a savings account, maybe not even keeping up with inflation? Let's dive in and explore how to actually put that money to work, starting with the safest options out there. You know, it helps to think of investing like climbing a staircase. You don't just leap straight to the top, right? You start on those first few steps, the ones that are the most solid and stable. For us, that means looking at investments that are all about security and slow, steady returns. The absolute safest place to start your journey in Sri Lanka is with government securities. Think about it this way. You're literally lending your money directly to the government. And because the government itself guarantees to pay you back, they're considered pretty much risk-free. It's like a promise backed by the whole country. Okay, so what's the difference between these two? Well, it really just comes down to time. T-bills, or Treasury bills, are short-term. We're talking under a year. You buy them for a little less than their face value. For example, you might pay 9,500 rupees for a bill that pays you back the full 10,000 rupees a few months later. T-bonds, on the other hand, are for the long haul, anywhere from 2 to 30 years. They act more like a traditional loan where you get paid interest twice a year. And here's why this is such a great starting point. Even recently, these super safe short-term T-bills have been yielding around 7 to 8% annually. Now, just compare that to what you'd get in a typical savings account. You can see why it's a pretty attractive way to get your money moving without taking on a ton of risk. All right, so what if you like that idea of safety, but you really don't want the hassle of managing individual bonds yourself? That, my friends, is where unit trusts come into the picture. For beginners, two fantastic options are money market funds and gilt-edged funds, which basically do the heavy lifting for you by focusing on these secure types of investments. So what on earth is a unit trust? Just imagine a giant pool where thousands of people, just like you, put their money together. A professional fund manager then takes that massive pool of cash and invests it in a whole bunch of different things, like stocks or bonds. You own a small unit of that big, diversified portfolio. It's diversification made super, super easy. And maybe the best part, the barrier to entry is so low. You absolutely do not need a fortune to get started with this. As you can see, many unit trusts in Sri Lanka will let you start investing with as little as 1,000 rupees. This just makes building wealth so much more accessible for pretty much everyone. Okay, so you've taken your first few steps on the investment staircase, and you're feeling comfortable. You might be ready to climb just a little bit higher. This next part is all about striking that balance, taking on just a little more risk for the chance at some higher growth. Now, within that same world of unit trusts, you've got more choices. On one hand, you have equity funds. These invest mostly in stocks on the Colombo Stock Exchange, and their whole goal is higher growth over the long term. On the other hand, you have balance funds, and the name kind of says it all. They create a mix of stocks for growth and bonds for stability, which really helps cushion your investment when the market gets a little bumpy. Another thing you'll hear about are ETFs, which stands for Exchange-Traded Funds. Now, like a unit trust, they hold a whole basket of different assets, but the key difference is how you actually buy and sell them. ETFs trade on a stock exchange all day long, just like an individual stock would. For now, they're mainly something you'd access through international brokers, but they are a huge tool for diversifying your investments around the world. We've now made it to the top of our investment staircase. These are the investments with the highest potential rewards, but, and this is really important, they also come with the highest risk. This is where we start talking about getting direct exposure to commodities. Wow. This quote just perfectly captures the potential here, doesn't it? During a recent period when global commodity prices were booming, some of Sri Lanka's plantation stocks saw these unbelievable gains. It's a really powerful reminder of both the incredible rewards and, of course, the high volatility that comes with this kind of investing. Gold is that classic safe haven asset people flock to. In Sri Lanka, you've got three main ways to get in on it. First, you can buy physical gold, like jewelry or coins. Second, you could open a gold savings account at a bank and just accumulate it over time. Or third, if you use an international broker, you could invest in a gold ETF, which tracks the price of gold without you ever having to actually store the physical metal. This chart really pulls everything we've talked about together visually. See, over on the left, you've got the low-risk, steady returns of T-bills. Then in the middle, you have the more moderate potential of something like a balanced fund. And way over on the right, you see the huge potential but also the big swings of something like plantation stocks. The whole point is figuring out where on this spectrum you feel most comfortable. All right, theory is great, but how do you actually do any of this? Let's get practical. Let's look at the actual platforms and brokers you'll need to start your journey. Buying stocks is probably a lot simpler than you think. First step, just pick a licensed stockbroker. Second, you open what's called a Central Depository System, or CDS account. And get this, you can now even do it online with the CSE mobile app. Third, you put some money in your account. And finally, that's it. You're ready to place your trade. Here is a great little cheat sheet for you. This table gives you a super quick look at all the options we've covered, comparing the risk level and the typical minimum investment you need to get started with each one. It's a fantastic little reference to have as you think about what your first step might be. So, what could all of this actually look like when you put it together? Well, a pretty balanced beginner portfolio might put a big chunk, maybe 60% in those low-risk assets, like T-bills or gilt-edged funds. Then, maybe 30% could go into moderate risk options, like a balanced fund, to get some growth. And finally, you could put a small speculative slice, say 10%, into those higher risk plays like individual commodity stocks. So there you have it. We've walked all the way up the investment staircase, from those super safe first steps to the highest potential rewards. Now, really, the only question that matters is the one right here on your screen. What's your first step going to be?